Hello, everyone. I'm Esteban Duarte, credit markets reporter for Bloomberg News out of Toronto. And I'm joined by Zauresh Kezheneva, funding officer at the International Finance Corporation. Also, Heather Taylor, Chief Financial Officer and Treasurer at the City of Toronto. And Elizabeth Wallace, who is Senior Manager for Funding and Foreign Exchange at the Ontario Financing Authority. So we will be discussing for the next minutes about the ESG markets and how the ESG market has evolved in Canada. And let me start with a general question. This year we had seen, the federal government selling for the first time a green bond. We had seen a utility company selling nuclear power green bonds. We had seen, more ESG bonds and also the first hybrid green bonds, this among other developments. So what would be, your assessment of the current situation of the ESG markets here in Canada? Maybe if Heather would like to start.
Sure. I can speak from the City of Toronto's perspective. We established our green bond program in 2018, and we added the social bond program in 2020. And both of our ESG bond programs follow ICMA's principles. We've received positive independent second party opinions, and currently our ESG bond issuance program is about 25 to 30% of our total debt issuance program. We will be on an ongoing basis evaluating the new ESG labels, but also monitoring our needs, the city's needs, as well as investors' appetites. So I can't really speak to the bigger market, but I can speak to what we as the city have done and what we continue to be committed for.
Elizabeth?
Sure. Following on Heather's comments, Ontario's experience has been limited to the green bond market, so my comments will relate to that market specifically. We've been actively issuing green bonds in Canada since 2014, so we have a little bit of a track record, and we issue green bonds annually or more recently twice per year. And over that time period, as you can imagine, we've seen some trends emerge. The number of green bond investors has proliferated, and the type of issuers has broadened to include not just governments, but pensions, utilities, financial institutions, corporates, and more. The influence of the green bond market has been actually spilling over into non-green issuance, where you see particular issuers referencing things such as UN SDGs or even the green bond principles, although they're not issuing a green bond. So kind of interesting to see that effect, that ripple effect. The pricing has also evolved through time with very small greenium in their early years and now a more sort of stable and predictable perhaps greenium associated with green bond issuance. And impact reporting is one of those things that has become far more robust over that time period. So seeing a fairly successful growth of the green bond market in Canada, and seeing the participation of not just Canadian entities, but international entities in that space.
Sorry, your perspective is very interesting because it's a foreign issuer, coming to the Canadian dollar market to raise funding here. So what is the current situation, from your perspective of the ESG bond markets in Canadian dollars?
Thank you, Esteban. I think I largely agree with Elizabeth's observations with respect to the evolution of the ESG bond market in Canada. We did issue 2 ESG labeled bonds in Canada over the years, but we have been very frequent issuers of green bonds, or in social bonds, whether in public format or private placement format, mostly globally. starting our green bond program back in 2010 and adding social bond program in 2017. So if I may, I would comment maybe a bit larger on what we see overall. And what we see is that this year, the cumulative sustainable bond issuance globally reached $3 trillion, with more than 2 trillion issued since the start of 2020. However, looking at the current year, new issuances of sustainable bonds dropped by 16% versus a similar period last year, given challenging financing conditions and higher volatility this year, which is basically in line with the general bond market trend. I would say the biggest driver of the decrease was for social bonds, which posted a decline of more than 50%. But we also need to be mindful that social bond issuance really skyrocketed and thrived in the previous 2 years on the back of needs for COVID-19 relief programs financing. So basically, we need to be mindful that we are looking at this huge pickup in the social bond issuance and then kind of a normalization. So I would also think that perhaps a contributing factor to the growth of the product in the last 2 years was the novelty brought in the social bond principles, extending social bonds target audience to the general public rather than a certain group. So it allowed issuers to expand the range of bankable assets for social bonds. That was one of the key factors. I would say in terms of composition of the ESG bond market, green bonds continue to dominate the scene. This year to date, green bond issuances accounted for almost 60% of total sustainable bond supply. And again, agree with Elizabeth that good book building momentum for these bonds often is reflected in more competitive pricing and also some sturdiness. I can share with you an anecdote. I remember us bringing a social bond to the US global market on the very day the WHO announced a pandemic. So what timing? So we were able to issue our largest social bond, the size of $1 billion, which was oversubscribed more than 3 times, despite these extremely volatile market conditions back on that day.
So we as basically as Elizabeth just said, and basically we have been having in Canada a ESG bond market, especially focused on green bonds. I think Ontario is the largest issuer of green bonds here in Canada. So wonder if that trend will continue here, or we will going into a more diversified type of labels. Sorry, just as mentioned, social bonds, but we haven't seen much about transition bonds. We haven't seen blue bonds as far as I remember. So are we going into a wider market in terms of labels, or what will be the trend in the coming years? Maybe Elizabeth, if you want to start.
I'm happy to start this conversation. I don't think I have the deepest knowledge on the subject, but the Canadian market and its ability to add labels, the market itself is not particularly large. And I think its proper functioning is the primary concern of all of us, issuers and investors in this space. And I think there's a real conversation to be had around fragmentation of the market as more and more labels get added, whether that is, for lack of a better word, additive to the overall market, or whether it may actually have some kind of unwanted knock-on effects. So while a wide breadth of labeled bonds could provide very targeted investment opportunities, it could also potentially fragment the market in such a way that liquidity concerns and that start to arise. So I think it's an interesting topic, but I do wonder at the need for more and more labeled bonds, or whether we could perhaps group things under, like we have so far, green, social, and then have the categories speak to more precise targeting of investments.
Mhm.
If I may, I just want to say that, again, I agree with Elizabeth. And from our perspective, from IFC's perspective, we continue issuing under the two existing thematic labels, green and social. And we believe that it is very important to strike a balance between more nuanced labels and larger market unification. And then to have each issuer assess how this breakdown fits into their particular business profile in the best way. So, for example, prior to 2017, we had two separate labels, inclusive business and banking on women, which we decided actually to converge into one theme, social bonds, after the introduction of ICMA's social bond principles, as we saw a potential for the market to consolidate around this product. And then it basically followed with the release of practitioners' guide by the IFC, UN Women, and ICMA on how to use these already existing sustainable bond issuances frameworks to advance gender equality. Basically, how to establish these gender-related commitments under these existing global frameworks. Also, kind of a similar approach we are taking with blue finance. So this, I know that regarding the development of blue bonds and blue finance, investors have been seeking guidance on how to translate general blue economy financing principles that were adopted, that were published in 2018 to specific guidelines for borrowers. So earlier this year, IFC developed the blue finance guidelines to identify eligible blue project categories in line with the green bond principles and green loan principles, green bond principles and green loan principles to help market participants select eligible blue project categories. So we hope it will help encourage best practices to grow blue finance.
Heather, do you want to add anything on this subject of, how the trend in terms of labels will?
Yeah, I'm not sure how much I can add because I agree with what's been said. I think from Toronto's perspective, as I mentioned, we started our green bond program in 2018 and then went out with social bonds starting in 2020. And that was really informed by investor feedback. We went to ESG bond investors and discussed what their preferences were in considering factors such as the availability of an index like the Green Bond Index. And so as we knew our programs had very targeted outcomes, green outcomes, social outcomes, we felt that we were actually meeting the demands of investors by going out under two separate labels. But we're committed to continuing to evaluate new labels. The Sustainable Bond Program is still on our radar, but really ours was informed by the investors. And so I can't really say more than what's been said because I agree, but speaking specifically from the city's perspective, the green and social labels align very nicely with many of our program investments.
Actually, that gave me an excuse to talk about a bit about sustainable bonds. I think Ontario at some point, I don't know if it still that's the case, is has been considering adding sustainable bonds to your programs. Wonder if that's still the idea, or what is the the current stage of those works?
We have stated this publicly before that we are looking to design a sustainable bond framework that would allow us to issue a greater breadth of bonds, green, social, and sustainable. And that is still work that is underway. at the Ontario Financing Authority. It is well down the path at this point, but we have other priorities as well that are jockeying for time. So we do hope to put a pin on that in the not too distant future, but the framework was much more involved than perhaps we anticipated, as these things often are when you start them. But that is still the road we're on, and the objective we're pursuing: a sustainable bond framework for future issuance. Yes.
If you allow me, just it would be in the current fiscal year, or do you think that's more into 23-24 fiscal?
I can't commit because it's not just my timeline that I'm speaking for. It's other involved parties and stakeholders as well. That would be my hope, but I couldn't promise that. No.
Okay. So the other element that I would like to ask you is the investor base. You have been consistent issuers of in the ESG bond market here in Canada. How do you see evolving the investor base? Is obviously the Canadian bond market is a mature market, but I wonder if if you see the ESG bond market also in a mature level, or still is in a rather growing phase?
Well, I think it's continuing to grow. I mean, it's been hard to kind of monitor what exactly is going on because markets have been so volatile and in somewhat unusual times for the last few years. So I wouldn't want to extrapolate too much from what we've just seen over the last, say, 30 months. But looking sort of at the last 8 years, when Ontario has been issuing green bonds, a couple of trends are emerging. The proportion of North American investors in our Canadian dollar green bonds has actually gone down from what was normally sort of more than 90% in our earlier issues to kind of now sort of stabilizing around 75%. So that therefore would beg the question of who else is buying the bonds now if it's not North American investors. And so I'd say we've seen an increased participation from like Europe, Middle East, Africa, and Asia Pacific regions, it's always nice to have that kind of diversification of investors come in. We have seen sort of your traditional investor groups participating, so asset managers, pension fund managers, insurance companies, and banks, all participating in all 11 of our issues to date. And maybe just banks and pension funds, their involvement seems to be increasing steadily over the last few years. So a little bit of anecdotal evidence that they're more involved in the market as time goes on. And the other thing I would say that hasn't really changed is the percentage of investors with green mandates or that are UN PRI signatories. They tend to be the vast majority of our investor base in any of our green bonds, and that continues to hold true. In terms of growth of the market, the one thing I think we've always noted at Ontario is even when market conditions are tough, our green bonds still seem to succeed. We still seem to be able to issue them with some success. And so I think that bodes well because I'm not sure that markets are going to settle down anytime soon. So I'll hope that that trend continues to be in place for Ontario and for all issuers in the green space.
Heather?
Yeah, so our view of the city of Toronto is that we do believe the trend is for more issuance and demand as we move forward. And I'm hopeful given the fact that they do make up at least 25% of our annual issuances. I think where the difficulty is the factors that Elizabeth just alluded to, is that, the factors that go into investor decisions as to whether or not they're going to make an investment, whether it's an ESG or a conventional label, but, the size of the issue, the term of the bond, the general market conditions, which we all know have been challenging over the last couple of years. But those are all non-ESG factors that also will influence whether or not an investor is interested in the ESG space. The good thing is that, as Elizabeth mentioned, and I agree with her, sometimes that ESG label is just that nudge to give an investor that extra perk about getting an additional outcome from the placement of their investment. I think generally speaking, it would seem that we're following in the footsteps of the European ESG market, which then leads to further growth. And I do hope, my fingers are crossed, that the growth is there, but obviously given the market conditions and some unprecedented time ahead, it's difficult to predict exactly how this is going to unfold.
So in your case, I mean, you issue in several currencies across, during the year. How do you see this investor base in Canadian dollars evolving versus other currencies where you are issuing regularly?
Well, so IFC's annual long-term funding program is between 12 to 14 billion. So we're a mid-sized issuer, and our aim is to be able to diversify our funding sources and investor base as much as possible, given the size. So we strive to maintain presence in Canadian dollar market, issuing a benchmark every year since 2018. And right now we have full benchmarks outstanding for more than 2 billion Canadian dollars. And so what I noticed when we are whether about to access the market or having regular engagements with investors from Canada and also with different other market participants covering Canada, is that we've been consistently hearing very much strengthening rhetoric from the market about heightened demand for thematic issuances. And so out of 4 currently outstanding issuances by IFC, 2 have dedicated green or social use of proceeds. And I would say this is due to quite pronounced voice of investors in the maple market, and also due to the general wave from our SSA peers also issuing with thematic labels. And we try to support this trend as much as we can, because if you look at the issuances statistics by supranationals, you'll really see that over the last few years, more and more, almost every issuance or every second issuance carries some kind of label, which I wouldn't say is the case for some other markets where it's, I think, more spread out. So from our perspective, from our experience, we issued our inaugural green bond in 2019 in the maple market, and that allowed us to increase the number of investors by 50% in our book and attract new ESG accounts. And this year we followed up with the social bond issuance in the Canadian dollar market. And although we have only 2 data points, so we cannot draw general conclusions on the evolution of the ESG investor base in Canada, what we notice is actually a higher proportion of Canadian accounts, be it commercial banks or asset managers, in our thematic issuances versus vanilla issuances. And also this year's social bond also attracted larger interest from central banks and official institutions compared to vanilla issuances we had before.